Hello, everybody. Welcome to the latest episode of the Plus3 Futures and Commodities Show. My name is Ben Maldonado. I'm here with Barrie Hederachi. Hey, Barrie, how are you?
Hi, Ben. I'm doing good.
It's good to hear. Another week in the books. Hard to believe that's already the first Saturday in November when we're recording this. Since it is the first Saturday of a new month, today is the special show where we're going to dedicate, or I'm going to dedicate all my time to the monthlies, sort of taking out the telescope, getting a bigger picture view, and sort of seeing, where the major trend is in each of these markets. So I'm excited about that. In my review, a lot of interesting things came up. Barrie and I have talked about them, and we're excited to share it with you all as well. As always, though, we start with Bitcoin. Here's the daily. We were just bantering about this, about how with all the news and everything that's going on, Bitcoin's back in a triangle on the daily. We had that nice push up. Now we're sort of coiling up in this triangle. The key line is this, just under 60,000, like 59.7, 59.5 area. As long as we're above it, it's bullish. If we get stuck below it, look out, because a fast move is coming either way, up or down. So where are you on Bitcoin right now?
Well, I'm always a little bit skeptical on Bitcoin.
Right.
Here, we had an ABCD up, and we ended pretty much at the upper end of that triangle there. Not exactly the spike, that looks like a false break, but the other part. And what I was just going to say before the show was, if it was all with all that bullish news, you'd think it'll go a little higher instead of
sitting here, right?
Instead of just sitting around. So so we'll see. But like you said, I think that 60,000 line is critical, and psychologically too, right? The nice round number. So
sure,
I think long as it's above that, it's on a bullish stance for the short term. So yeah.
Since we're at the first Saturday of the month, let's look at the monthly on Bitcoin. Every time I pull this chart out and take a look at it, it's amazing with all the volatility, how well the squares define the price action on this thing. And right now we're sitting, above the full square here. So that this is like 56.7 area. As long as we're above that, it's bullish. We can certainly go up and test this half square, which would be new highs around 70,000.
That 56,700, right?
Yeah, 56.7. So we're kind of in no man's land now if you're looking at it from a monthly standpoint. But as long as we're above that 56.7 area, it's bullish. So we'll continue to watch the monthlies and continue to bring the story to you, what the charts are telling us. Boy, the stairway to heaven, Barrie, marching right up to that full square.
No doubt about it. Look at that. So let me since we have a monthly wrap up to do, what I'll do is I'll just keep it short and stick to the points here. Let's see, where did we left off last time talking about this 45.60 being a key level.
That was your spot. Look at it broke out and tested and then went
right last week.
Yeah, but I mean, look at that price action there. It popped above, pulled back 1-2 bars, and then gone.
It was gone. Yeah,
it's good level.
And we also had a couple of cycles that were sitting around, and we weren't really sure if it was going to trigger or not. And 45.60 was that key level that we were looking at. So we cleared that. And I think we gave out 46.93 last week as the next resistance point. It's on the spreadsheet. I don't think I added it here. And, we pretty much got there also.
Yeah.
Right? Basically, we kept and tapped it. And look, this is going straight up. To me, it looks a little bit blow offish, kind of a leg here. Then again, we've had them before. So I think we're fairly clean here till we get into about at least November 12th, which well, another Friday, right?
Mhm.
So at least up until then, when is the first, that would give us a 30-day run up. So up until then, I think market's in pretty steady rhythm here, and not much else to do other than trade the long side, right?
Yeah, buy pullbacks.
And on the weekly, again, this 43.50 area was a big thing we were watching for a while after we cleared it, came back, retested, and back on up now. Again, there's really nothing square wise other than to trade the trend. The next key timing line is in December 10th, would give us 90 bars from the crash low. So that would be the next important point. For now, there's nothing much. I think watch the short-term levels and just trade in that direction. That's pretty much it. And you guys
Agreed.
can check the Twitter and also the spreadsheet for numbers that we update during the week.
Speaking of the spreadsheet, yeah, that's updated. And we'll post links to that in the video. And also make sure on the videos, a lot of you did it this last week, and we appreciate it. If you like the content, if you find it useful, hit the like, share, hit the bell, all the things that YouTube wants you to do. Please do that, because it's a way we're getting good feedback that, hey, the content's good and people like it.
Right. That helps a lot. And yeah, it would be a nice way to say thank you.
Yeah.
So that's the E-mini, not much, I think, long side. And I think if we can clear 46.93, we have plenty of room to run. But I would watch 46.93 as a key balance point for next week, see if we can actually get above it and stay above it. If we get above, it should stay above, right? And that will be bullish. If we can't get above, it's probably going to consolidate or maybe pull back a little bit. And
Where's your full square there, Barrie?
well, this is a 60-degree square. It's around 47.37, 47.40, right up there. And that's the smallest square I use. So I wanted to see where things were from that perspective, right?
Sure.
And if you go on to a 72, you can see we got plenty of room all around. And if you take a 90, plenty of room all around. So I think we're in good shape.
Sure.
On that. So the key level to watch would be 46.93. Next, take a look at bonds. What a story, eh?
Wow. Amazing action this past week in bonds.
So last week we left it off at 160.20 being a critical level to watch, and of course price was crisscrossing that, but we wanted to see when price would hold above it. And Thursday going into Friday, we were managed to hold above it, and you saw the results. We poked right up into the old range. The old range is 162, around 162.02 here, but right in at 162 to 164.12 up above is the next resistance level. So on this leg, if it's strong enough, we should go and test 164.12. And if we get above that, the upper end of the range would be 166.20 or so. But I think for next week, the bracket would be 162.02 and 164.12 would be the bracket to watch. Looking at the weekly bonds, again, we were watching the price action at the half square. I would square 90. If you guys didn't catch the last show, catch the last couple, because we kind of look at this every week as a story. And so we covered the half square here. We're looking to see which way it would settle. Last week, we saw that we're starting to settle above, and it worked out. As you can see, last week was this bar where the cursor is, and we managed to sort of close up high. And I mean, the week before last. And last week we managed to just basically stay above and move higher. And of course, closing at this pretty important trend line. I know, Ben, you had a couple of trend lines you were watching, and but this one, we're just at the brink of breaking it. So I would leave it at that.
Isn't it amazing how many times they'll close the week right on these important lines just to keep you guessing?
Exactly. Look at all these, right up here.
Right.
And what was the other thing? Well, the weekly, the main thing being we're off the half square, so it's bullish until it's
Mhm.
not,
That's
which
right.
we would try to gather from the levels that we use. So 164.12 is a level to really watch next week. Next, take a look at crude. Last couple of sessions, we talked about crude squaring out up here. It's 45 by 45, and we also had a square on the weekly. So we were looking for a little bit of a correction or consolidation, and we got that last week. Now, it's possible that this high is in place for a little bit longer, and the way we can sort of measure that is by looking at our levels. So next week, if we can get above 82 on crude, if we can get above 82, I think we're back on the wagon, back on track, and we should go higher. And I would say if after we clear this old high right at the half square, it really opens up the other, the second half of the square. So it could be a sort of a fast move past this. So really watch the half square level, which is around 84.50, which was our target a while back. And then 82 is a key level to watch to see if we can get above or not. And the support below, really critical support below, will be 77. And if we take that out, then the bullish case will have to be postponed for a little bit, maybe a couple of 3 weeks.
Agreed.
And taking a look at the weekly, again, here's that square that we talked about last couple of weeks, and it did stall the move up for at least a couple of weeks. We'll see how it plays out using the daily levels. I think that'd be the easiest thing to do.
I think that's a good point you bring up, Barry. The squares don't necessarily mark like a top or a bottom where you get a V and the bullish trend is over, the bearish trend is over. Sometimes it just slows it down and consolidates, and you get some sort of congestion for a while, but the main trend continues. You just have to look at price action once the square comes in to see what the character change is.
Exactly. At least that's a place to pause or take some profit or do some management business at these key levels, right? Other than that, yes. So gold last week we left off with 1765 being key support that we should hold, and we did that right on Wednesday. Low was right at that 1765 area, and the resistance now, or it has been this 1832 level. And I think the whole show is going to start after we get through this 1832. I think that's the key level to watch here. I think
it looks ready, doesn't it?
It looks very much ready to go. And I think it's just a matter of market has to just prove it, right?
That's right.
1832 would be a key level to do that. And looking at the weekly gold, we put in this. We saw that compression, and I think that's going to show up on your monthly. And we put it, we drew in these triangles, and we're looking for some kind of a break. Again, 1828 is the level on the weekly. So 2832, it's right in there, and you guys can see the band here. It's very clear, sort of a box we've been trading in. And I think once we clear that, it should move. And for a while we weren't sure which way, but noticing that we're making higher lows, looks like we're going to push on higher. So
agreed.
That looks bullish there.
And there's a lot of energy been built up in this compression that's happened.
All this,
15 months, 16 months now.
Yeah, that was a good, solid correction. We did the entire square. Came down 52, right? It bounced up, so we're right in there. It's operating okay. So the dollar, we've been bullish, and last week or the week before last, we dropped in this little trend line around 93.50. But the key level we were watching is 93.70, which is on the side here. And the week before last, we held the trend line and we left it on a bullish note, and the market didn't disappoint. And I think it's fairly clear up until 95. There's really, it might consolidate and, get a little sloppy in here, but it looks bullish.
Look how well that trend line held.
trend line is rock solid.
Yeah,
When they
that's a
work,
good
they
one.
really work. So,
Yeah, that's true.
and looking at the weekly again, last week we were looking at these little channel that we drew in a couple of weeks ago or a few weeks ago. On a long-term basis, we're bullish, and we had the key levels. We had 93.70 to 92.94 being a key level to get above on the weekly, and looks like we've done that after a little bit of struggle. So again, weekly is bullish. Nothing.
Yeah, and people, some people might be thinking, well, how can the dollar be bullish and gold be bullish? If you study the history of the market, one of the periods that that Barrie and I in our cycle work have connected present day to the 70s. In the late 70s, the dollar and gold went up sharply together. And so it is possible. It happens. These relationships, they come and go, they phase in, they phase out. So don't get stuck on, well, if the dollar's strong, gold has to be weak, because it can happen.
Well, that's why the chart will have the ultimate say.
That's correct.
And again, using the square 72, we can see we had a little bit of a struggle at the half square, and finally looks like we're getting above it. So, the bullish case is fairly strong here.
Mm-hmm. Which should be the inverse.
Which is pretty much the inverse. It's starting to slip under the square here, 72 square. We've been watching that for a while.
Mm-hmm.
And a week before, we were looking at that 169 level to hold, and it did. And after that, it was just a big dunk and kind of
perfect kiss goodbye.
Yeah, it's struggling.
Yeah.
Even though this has a look of a false break, the downward pressure is fairly tight, and we didn't really, we're kind of getting lower on the square. So to me, it looks weaker than anything else.
It's like hanging on by its fingernails, basically.
Just barely, just barely, right? We'll just leave it at that. I think it's on a weak grounds here below this 169. And the weekly euro is really the story, right? That's the one to watch. You can see how that support that is hanging on is the half square.
Yeah.
And that's exactly right. That half square is exactly around 1520, 1521. So that's where that is. And I think long as it's below this, the upper trend line, it's in super weak condition. So I wouldn't be ready to buy this just because it's on the square. It really needs to prove now through the pattern, right?
Absolutely.
So it might be consolidating here for a while, but it's on a weak footing here.
Agreed.
Well, that's my wrap. I wanted to do it quickly because I know you have a lot to cover today. So let me throw it back to you. And you guys, if you guys like this, please, do your likes and share it with like-minded folk, and it'll help us, get the word out. So thanks. Wow.
There's
Whole
another
square. Whole new square.
Yeah, another stairway to heaven, right?
Mm-hmm.
So here we got
It's
the
more
NQs.
like an escalator, but
yeah, or an elevator straight up. So you could see that, this is not something that none of you don't know or realize. From the lows, the pandemic lows of last March and April, basically on the NQs were straight up. The thing that Barrie said, which is really important, is that we've basically cleared this square now. This bar that we're working on presently, hasn't even touched the top of the square. We got above it previous month, end of September close, and then boom, right away. So the key thing to take from this is that we don't have much resistance, no resistance above, until we get to this half square, which is in the, what is that, about 17,500 range. What I want to watch is if we get any kind of weakness, can we sit on top of the square, which is around 15,660, 665. If we can sit on top of this and not get stuck under, man, you gotta be really bullish for a move, at least to the half square and probably the full square.
or several squares.
Or several squares on a blow off. That's right. So we're going to watch, again, even though this is this is monthlies, and this is, look straight up. You can see there's pullbacks within the month. So watch any weakness to see how price reacts at these important levels. And if we get stuck under here, you got to start thinking, hey, maybe the party's over. Maybe this was it. So we're going to watch the squares and watch the levels to help us guide us on these really, really spiking markets. Here's another one that, looks very similar. The ES, this is the monthly. While we haven't cleared a full square, we have cleared the half square. The half square here is around 45.25, 45.30. So on any pullbacks, we want to see, do we stay above that? Can we stay on top of that? Interesting thing also is I put some timing in here just to show people, here's a high to high from the 07 high, puts us into March of next year for 180. 156, which is, 52 three times, gives us the 2009 great financial crisis low, puts us into April of next year. If we take the COVID lows to March, you're talking about 26, which is, half of a square of 52.
Mm-hmm.
So there's a lot of timing coming for next spring. We're going to watch and see, how price acts.
The level at 09 lines up also.
Yeah.
Very nice.
Yeah. So there's a lot of stuff for next spring, which is why, on Twitter, I've been saying, first quarter, we could have a nice melt up into there. And then we got to start, really looking both ways before crossing the street. But we take it level to level. So we're watching this, this 45.30 area. Do we hold there? If we hold there, it opens up, 49.50. If we get above that and hold it, we'll go up to the next level and so forth. And that way you don't get yourself in trouble trying to be in the prediction business. We're in the trading business, right? Level to level.
It does look, I can't think of anything other than a melt up on this. Look at that pattern.
Yeah. It's pretty clear that that's the highest probability outcome. And so we're trying to play it that way, while again, being aware of where we are in the move and zooming out on these monthlies and sort of taking a bigger picture view gives you the idea.
Right.
So that's the ES monthly. Let's, here we've got bonds. The interesting thing about bonds is if you just read the news and looked at quote unquote, the fundamentals and thought about everything, you say, well, interest rates have to be going up, right? Inflation is up. The government's printing money. There's all kinds of spending going on. But the monthly, the bigger picture is telling us a different story right now. We've been in a downtrend, since the lows of the pandemic in last March. And now we're starting to break out on a monthly basis. We broke a downtrend line. The interesting thing that Barrie and I were talking about is I had this trend line drawn in when this low came in and we rallied up off of it. The recent low, not only was it a higher low, right on the trend line. Mm-hmm. And we've got a monthly reversal working here, with the new bar already. We made a higher high on the new month. So bonds are looking pretty bullish from a bigger picture standpoint right now. This is the only one I'm going to show something besides the monthly, because I think it's really important to look at this weekly. It looks like a crazy chart, I know, but if you look at the circles and how price gets affected when it hits the circles, it shows you that there's some resonance here in this chart. What we've done recently is take out this sort of upward sloping trend line that really protected price and held price for months and months and months this year. Well, we just shot up through it, last week. So we're watching this. The potential is there for bonds to be very bullish in the next few months, possibly coming up here and testing the edge of the circle here, in the 68 to 70 range, depending upon when it happens. So interesting charts, interesting messages we're getting from the bigger picture charts on bonds. I know, Barrie, you follow the bonds. What's your thoughts on that?
Looking at watching the daily every day, you can see how it's slowly starting to turn up, right? It's consolidating, pushing a little higher, consolidating. So, and looking at the higher time frames, it's clear the pressure's building up for a pop to the upside now that you broke the triangle. So
right. And I know we all get frustrated on the dailies when you see this back and forth movement, but it goes nowhere. That's exactly when you zoom out, take a look and see what's the bigger picture telling you. And
exactly.
And there's a message from the monthlies on the bonds here.
Mm-hmm.
Next one we'll jump to is wheat. Wheat is the current star of the grains, and the monthly shows absolutely nothing going wrong with wheat. It's doing everything you want a bullish chart to do. Interesting thing here, what I'll point out is early this year when it was sort of volatile up and down, notice that all the highs, all the lows on these bars were sitting on top of the highs for the past 5, 6, 7 years.
Mm-hmm.
And again, it told you someone wanted to own this, someone wanted to buy it. The other thing to look in this pattern, higher lows on the monthly, a series of them throughout this year in 2021. So I think this is a very bullish chart. Shorter term, 820 is the next area of resistance on the monthly. After that, you're looking at 960, 965. So wheat is very bullish. We're very bullish on wheat. And we have a major crop report coming up on Tuesday. Anybody that's in the grains probably knows that, but if you don't, Tuesday at noon, the crop report's coming out. So it'll affect the grains. Next one we're going to take a look at is corn. Not as strong as wheat, but still very bullish. Again, we had a nice run up late last year, early this year. We've corrected since then. And now we're beginning to make, higher highs and higher lows, 3 consecutive months so far. We're sitting above a full square here. And again, look where the lows on this correction have come in, series of lows here, well above these consolidation highs we saw for the past 6, 7 years. Right. Even the highest one here. Well, as long as price is above this area here, you can see that it's going to be bullish, and the probabilities favor a very bullish resolution. We're seeing that in most of the commodities that we follow. This is soybeans. This is the laggard of the group. Even though it's the laggard, it still has, when you look at it from a bigger picture standpoint, still very bullish structure, very bullish formation here. We had a strong move up and a spike. Full square up here stopped it, started a correction. Right now we're trapped between this trend line and the half square. But again, look where these lows are coming in. Mm-hmm. Right on top of the 2016 highs and above this entire formation. Yeah, beans is bullish. It's just a matter of, when are we going to get that next pop? The thing to watch is if we can get above and sit on top of this half square in about the 1275 area, that's a real good sign that the next run is going to start when you're looking at it from a monthly basis. Let's take a look at gold. This is one of the best looking commodities out there right now, in my opinion. And you can see this on the monthly, that we've been doing a consolidation correction here for well over a year now. And it's starting to push up. It's starting to push up, right? We made a spike low. We made a spike low here, failed attempt here, failed at the full square, came back right back down to the half square, made a higher low. And then the last 3 months, we've been seeing higher lows, higher low, higher low, higher low, all inside this big bar, this big down bar. So this is building energy. This is the formations you usually see prior to a big move. Barrie very expertly identified the level. It's that 1830 to 1835 area. We break out of there, breaks us out of this downtrend line, and on the shorter time frames really gets things going. So gold is bullish. Again, I'll call your attention, if you look left, we're nowhere near any of this accumulation that was going on down here in the sideways. But importantly, we're right in the middle of this structure here where we made highs in 2011. We're not below anything. We're not getting trapped or stuck under anything, any previous structure that would have, raise alarms and concerns that, hey, somebody's distributing and this thing's going to collapse. It looks like the opposite. People are accumulating, somebody's buying, and it's all happening around the level of previous all-time highs. So gold looks bullish. Gold's little brother is silver, and silver is doing something similar. It's holding. And one of the interesting things, though, you saw gold was much more of a price correction in addition to time with a sharper move down. Silver's basically been in this sideways channel. I put this trend line here to know, okay, where do we need to go on the upside to actually break out? But we're holding above, the lows are holding above the full square. It's above this entire consolidation area, right? These were the highs in 2016. We're sitting on top of those. We're starting to make higher lows 3 months in a row. Silver looks like the same as gold in that it's ready to break out and it's ready to start moving. You have anything else to add on silver?
No, I think it's pretty clear. We got the lower boundary zone pretty clearly marked, and we're holding above that. So no, I think we're good.
Yeah, the picture's bullish.
It's just buying the time, biding time. We just
That's it. Waiting for the big boys to move it.
Yep.
Here's the monthly on copper. Copper of all the metals has been the strongest because you can see we're up near all-time highs. And what we've been doing, and this is a monthly, right? This isn't a 60-minute or a 4-hour or even a daily. This is a monthly. Basically been frustrating both the bulls and the bears by chopping around for the last 6, 7, 8 months. But we're chopping around at a really high level, right? Not anywhere near this high here, not anywhere near the highs here. I mean, if you look at the lows, just like gold, we're up near the previous highs, previous all-time highs in 2011. So I think copper's bullish. I think we need to see the resolution of this. We're starting to see these monthly higher lows again, the same pattern, 1, 2, 3, 4 different higher lows. So once we can escape this full square, which is around the 442 area, and sit on top of that, that's when we're going to see the big move come in copper. Let's jump over to the energy stocks and crude. Crude is, again, in our opinion, my opinion, a very bullish market. One of the things to notice here, in addition to the steep uptrend from the plunge in March of last year, we're sitting on top. All the price action for the last 2 months has been on top of the highs, the 2018 highs. That's bullish, right? But there's nothing you can say about that other than it's bullish. And the key level here on a monthly basis is getting above this 87.77 area. And you can see why. 2011, 2012, 2013, this is the area of the lows. Mm-hmm. So if we can get on top of that, sit on top, we can certainly make it up to the half square, which is 100. And then that after that's recovered and sat on top of, you're looking at 114, 115 is the next level. So crude's bullish. It's frustrating some people because, as Barrie showed you on the daily and even the weekly, we're pausing and kind of chopping a little bit here. Bigger picture, still very bullish. All right, next one is natural gas. It's been a very good performer for us this year. And as you can see from the chart, we're just getting started from a bigger picture basis. And we had that move when we broke out. We're now sort of battling with this full square here in the 566, 568 range. You know, we made a spike high there in 2013. We made a spike high there in 2009. Crude's right, sort of building the energy to see if it can't sit on top of this square and then make the next move. Still very bullish on nat gas. Still, I said crude, it's not gas. Still bullish on nat gas. Think it's we're in a consolidation phase. You can sort of see a little triangle starting to form here. And odds are the direction of the next break is going to be higher. Next one we'll look at is sugar. Jump over to the softs. The trend in sugar is on a monthly basis, as you can see, is very bullish. The thing I like about sugar here is we're sitting on top of this half square. A couple months ago, the low came right in and tested the square. Last month, we couldn't even get down to the half square. And this month so far, we're making a higher low as well. On the lower time frames, we're consolidating. You know, if you look at the daily, it's been kind of frustrating price action up and down between 20 and a quarter and 19 and a quarter. We're just building energy sort of for the next move. But sugar looks really good. Next one is cotton. Cotton, we've been tracking. We were tracking this triangle. Once the triangle broke, we got involved. Once we got over the half square, the full square, we got further involved. Now we're going up and testing this half square. Again, if cotton starts correcting or starts pulling back or starts consolidating, as long as we stay above this full square and the highs from 2013, 14, the highs from 2018, cotton's bullish. And I think you can sort of see the pattern that is developing and is playing out in these commodities. It's all very similar. They're just in different phases of their moves. But the commonality is there's been a strong move higher, a breakout, and now they're settling in and correcting and consolidating, waiting for the next move while above previous highs and the consolidation highs where they broke out. The one exception in all the commodity world that we follow is cocoa. Right? Cocoa is yet to break out on a monthly basis. Every single other commodity that we've covered and looked at has broken out on a monthly basis, and the markers and the indicators that we look at are signaling that it is in a long-term bull market. Cocoa is the laggard. It has not made that move yet, and it has not given us that signal. That being said, we're seeing a similar pattern as we saw in the other ones when they were in that consolidation of higher lows coming in, continual higher lows. So we're watching cocoa because, again, you're talking about a 5 to 6 year consolidation here. Once it breaks out and we get the signal that it's sort of all clear on cocoa, I mean, you can expect a big move in cocoa coming too.
It's setting up.
Yeah. And Barrie, why don't you talk about the discussion we had a little bit? Like, there's two different ways to play it. How would you look at cocoa from those two different ways?
Yeah, absolutely. Look, well, I remember. Okay, we were talking about how to deal with these triangle and consolidations, and I think we came up with a couple of different ways to play. One is to buy the lower end,
right, down
when it comes
here
into test. Mm-hmm. And the other is to, buy the breakout when it's confirmed. So
that's right.
Those are the two ways. One thing with the breakouts is there's always, well, not always, usually there's a sort of a quick retest. So that's another place to get in case you miss the breakout. But like you always remind me, in this full blown bull market, you don't really get checkbacks like we saw in caught, broke out.
Yeah.
Straight up.
Gone.
Right?
Yeah. Gone. Yep.
So that's why it's good to have a couple of different ways to get a foot in the door before it breaks out. because you might not get a chance and you'll have to end up chasing the markets afterwards, right? So
absolutely. And this is why we look at the bigger picture, higher time frames, because you don't want to be chasing a market if the monthlies are super extended and we're near the end of the month, end of the run. But if it's just beginning or you're in the early stages, then you can have mistakes are going to be to the upside when you have the wind at your back on a monthly.
Exactly.
And lastly, here's coffee. Coffee is a really good looking chart. You and I were talking about this week, Barrie. It's one of the best looking commodity charts right now because it's really set to break out, and you can see what's been holding it back on the monthly here. Yep. In July, we had this massive spike. We were involved there, took a few profits. We held on to some. Mad that we didn't sell everything and buy back, but that's the life of a trader. And now we're testing it again multiple times. We're testing this level. It's around 2,212. So once we break through this 212 level, the half square is the most probable destination, which is about 254. And then after that, you're talking about, $300 coffee.
You know what's interesting with watching the monthlies? You're going through all the different charts. They're all straight up and ready to go further.
Yes.
And
yeah. If we look at a baseball game, I'd say it's like the fourth or the fifth inning in the game.
Yeah, and these are monthly charts, man. So a couple 3 years are just written in.
That's right. Which is why when you and I talk and some of the stuff I've tweeted out, these commodity markets, depending on the market, and because different ones are in different phases, there's 2 to 5 years left in these bull markets, and we're not, that's not wild predictions. That's just looking at the monthlies and how they've traded before when these sorts of patterns and indicators started registering it. That's what we're looking at. So maybe we're in the third inning in some and the fifth inning in others, but there's good room to run. So if you want to get involved, you find good levels and places where the risk reward is favorable, and you get in.
Not to mention all these prices are going to go up eventually, right?
That's right.
I mean, all across the board.
Yeah, and that's what we're getting on our sort of longer term indicators, is that these are not short term moves. This is a big time bull market that's going to be lasting. It's not a 6 month thing. It's not a 3 month thing. It's not a 2 month thing. It's a multi-year type thing.
Not a panic.
No, it's not transitory, to use the word of the year. But anyway, this has been the monthly review. We find it very helpful in our work. We hope you do too. If you do, please like the videos, hit the bell, subscribe, do all the things that YouTube wants you to. And we feel like this kind of view once a month it helps us tremendously, and we hope it helps you as well. So have a great week, everybody. Barrie, have a terrific week, and let's see if we can't continue the streak of positive weeks.
Let's do that.
Thanks so much.
Thanks, man.
Bye-bye.